Welcome to another episode of the Weekly Crypto Check-In, recorded on February the 19th, 2025. I'm your host, Robert Swartha, and I'm joined by my co-host, Andres Sandate. How's it going, Andres?
Good, Robert. Hope you're well. Busy week we find ourselves in, and
yes,
feels like winter again outside.
Yeah,
At least for Georgia.
Yes, unsurprisingly, we were not ready for spring as much as people wanted it. Mother Nature always reminds us who's the boss.
Yeah.
Well,
hopefully we're not. Sorry, I was going to say. Hopefully, we're not going to be entering and talking today about the crypto winter. I feel like is sort of lurking out there with respect to crypto prices over the last week. But lots of headlines to cover.
Yes, I'll say up front, I don't think we're headed towards a crypto winter yet. We still have more of this bull market to go. The sentiment on Twitter is that we are headed towards one, but that's generally a good sign. When everyone thinks it's going down, it's probably going to go the other direction. So
right, and these aren't the worst buying opportunities too, right? So so many people that you talk to say, "Oh, I invested in crypto once," and they're referring probably to a cycle or two ago, and they think that maybe they've missed out on a chance to get in. But lots to cover and break down.
Yep. So let's just jump in here. The first topic is more of a question. Is Trump rethinking his crypto council? And again, this was the council that was going to be head up or chaired by David Sachs, the crypto czar, and bring in different people. The rumor is he wants to get rid of the council and do more of summits where he kind of more open, which I think is inclusive in many ways, which is great because you end up with more industry participants to be able to have at least a small voice. But the rumor is he's tired of the infighting. I'm not surprised. Crypto has a good amount of infighting, and it typically comes, at least in these kind of scenarios, comes from the Bitcoin crowd. To them, it's Bitcoin and Bitcoin only. You've been getting that sentiment a lot of hate towards some of the other companies that might have been included in that council. So kind of doesn't surprise me. I'm not surprised Trump may want to switch his strategy here, but it's just sad. Like, you think the industry could come together to try to get some stuff done, but we're back to the old ways of fighting.
Yeah. There certainly a couple of months ago, if you'd asked people, there was all this excitement and momentum and jubilation, cautious optimism probably by more level-headed folks around where we would be come mid-February. I would say it's probably safe to assume that the shine is coming off a little bit, and that where we are today relative to where people thought we would be, when election night happened,
right?
There's a bit of a gulf, right? So I think realists are gonna probably weigh in now and say this is going to be messy because if the legislation or the audience is too tilted one way or the other, like too much Bitcoin, too much of this or that,
right,
you're going to end up with infighting, and then the industry will just be paralyzed. So
I think you're right. The honeymoon phase is over. Reality is setting in, and at the end of the day, like, it's still, we've talked about this before, but it still surprises me every time I think about it. Is election night happens, or leading up to the election, crypto world was like, oh, we're gonna come together, we need regulations, all this stuff. As soon as the election happened, it turned into, oh, we need a strategic Bitcoin reserve. It became very much all about one particular group. And now that it may not happen that way, they seem to be getting grumpy and causing problems. So not exactly pointing fingers, but kind of pointing fingers here.
I think I take an approach of there's multiple things that are causing a lot of this. I think the meme coin frenzy is not helping. And the fact that of the matter is, like, the players that are involved in that are out front, whether they're going to acknowledge it or not, the faces of that, there's no disconnecting the dots, right? Like, again, I think that there's a lot of variables that are causing this slowdown. I think the reality now is, what voices will emerge in order to try to get some of the things that we talked about, over the last few years, like stablecoin legislation,
Right.
and reform around custody, et cetera. So, yeah, there's a lot to work through. It's not going to be simple.
I wouldn't say it's a saving grace here, but maybe that line of thinking in that having a crypto czar in place kind of helps keep these things marching forward versus it just kind of falling to the wayside if it was just like a priority that no person that was specifically in charge of it would be. So maybe we still get to move forward, albeit it's not as fast as everyone wants.
Well, if you go back and look at Trump 1.0, the first
Yes.
presidency, there was this, all-star CEO council that was organized. I mean, it had Steve Schwartzman and it had everybody, Bezos. I mean, all these folks, and many of them came before the lights, camera, and action of DC and said, we're gonna sit there and work with this new administration and be all about creating jobs and prosperity. And it disbanded a month later.
Yes.
So I think those folks realize, like, there's the camera, the photo op, we'll be there for it. But then the private jets wheels up and it's back to like dealing with shareholders and dealing with like real issues. And
absolutely,
I mean, I think that these councils a lot of times are photo ops. And so, if you look at the headlines around the healthcare industry, I mean, Trump came out and said he raised $500 million at that summit. And I don't know really what that means in the context of, lowering healthcare costs or reducing, the cost of prescriptions. I'm not sure where that money's going. So I don't know. The jury's out on, is it the czar? Is it the council? I think you and I would just like to see, some legislation promoted in Congress. Just actually put a stake in the ground.
Absolutely.
Yeah,
for sure. So I guess moving on here, this next topic I found pretty fascinating, albeit we don't have tons of meat behind the headline here. So MasterCard did its quarterly result reports recently.
Yeah.
And, some of the big headline numbers that are not crypto related at all is their annual transaction volume was $8.1 trillion. Obviously, Visa's bigger, but MasterCard is still obviously quite good size there. 70% of their transactions are contactless now, which is, I would have loved to have known this number prior to COVID, right? Because there was so much businesses that accelerated their contactless payments during that period. But what we're getting at here is the tokenization of transactions. They claim 30% of their transactions were tokenized. They didn't say which blockchain. There's rumor that it's Algorand or Hedera. But I think it'll take time for more of these details to come out. Maybe it's a private version of these right now. Like, obviously, they're not moving the funds on the blockchain yet because regulations need to probably be in place for that. But I think that they're testing, and they're testing more out in the open, albeit not tons, than say a Visa or someone else is. But it's this is one of these, it looks like it's coming soon, and we're going to wake up the next day and poof, it's going to be here type situation.
Yeah. Well, it speaks to the utility, right, of the blockchain technology that we are at least excited about here at Teton. So
yeah, and it speaks to part of the thesis that we hold that it's going to be the businesses that adopt this stuff first before retail. Retail gambles on crypto right now. That's all they really do with it, or speculate. Now it's businesses trying to replumb and make things more efficient. So hopefully we'll learn more about this sometime soon. But it was a cool headline when I saw it come across my feed.
Yeah, no doubt about it.
Our next topic, the SEC has started acknowledging some of the altcoin ETFs. Obviously, there's already a Ethereum ETFs out there, and they've had a good first 6 weeks of the year from everything I was reading this morning. But kind of more focused on the ones that have applications pending: XRP, Doge, Litecoin, and I believe Hedera is the other one, if I'm not mistaken. But the SEC has been moving much quicker than people would have expected, even from the old administration, which was basically they would wait till the last day and say no. They're doing this ahead of time. And which acknowledging doesn't necessarily mean they're launching yet. This is just saying we accept your application, and I think it starts at like a 240-day clock that they would have to approve or deny by that point. My guess is it happens much sooner, considering they're already doing things sooner here. And this SEC is a very different stance. So exciting days ahead for the
Well, they're
groups.
working, they're working it over there at the SEC. I have a question for you, Robert. Is Doge as in Elon Musk Doge, have they
No.
got into the SEC yet?
I don't know if they've formally gotten there. As I guess a way to try to answer this question, Doge, the organization did set up a bunch of separate Twitter accounts. So Doge SEC, Doge,
Yeah.
DOD, all the different, I think there's like 40 different ones they set up. So people online can send messages specifically to the one that they feel like, oh, you need to look into this here.
Oh, got it.
Trying to help
Yeah,
guide them.
I was just asking because the budget for the SEC is always a big topic, right? In
Yes.
appropriations in Congress, and so I think if you ask a lot of lifers at the SEC, they would say, "Well, we need more resources, and then we could do more. We could offer
Right.
a quicker turnaround, and we could offer, blah 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 blah." But I don't know if it's dollars or what Doge's initial analysis of their budget is. But there are a lot of cuts happening at a lot of agencies.
Yes.
But it doesn't appear that they're slowing down the attorneys at the SEC if they're cranking out responses and acknowledging applications.
Correct. Maybe it's the a different division of attorneys, right? It's the not the enforcement division anymore.
Yeah.
But it's a tweet that I did see that was from Paul Graywall. He's the chief legal officer of Coinbase. He tweeted at Elon when Elon was mentioning the SEC at one point, saying maybe there should be a rule in place that if the SEC loses a lawsuit, that the SEC pays the other party's legal fees. And then Brad Garlinghouse retweeted it, obviously. So both a legal officer and a CEO of two different battles with the SEC. I mean, can you imagine the SEC going from thinking they got a $125 million judgment out of Ripple to all of a sudden having to pay close to $200 million in legal fees because it was viewed the other way? I can't.
You and I would be paying those legal fees, unfortunately, as taxpayers.
Correct, but the SEC does have a budget, but I think a good portion of their budget comes from
settlements and
fees and settlements.
Fees
so it's kind of the mob shaking people down. So I'm not quite sure anyone.
Well, be careful what we wish for.
Yes. So who knows? I can't imagine that suggestion.
Let's just stick them all on the meme coin promoters out there that are sniping everyone, and that'll raise a bunch of money. Well, let's move on. We've got a ton of other headlines. SEC once again declares XRP is not a security. Now, we would not have had this headline in here 3 months ago. So this is you buried the headline though. Yeah.
So it was just kind of like a 1.5 page kind of document the SEC put out, basically just saying under these circumstances, not security. It's something that many people in the industry outside of the Bitcoin community, admittedly, have long fought for. I think that in some ways, XRP is paving the way for a lot of the other altcoins, and just a general rethinking at the administration and the SEC. So not tons of meat here, but it's beyond to me, this paves the way for this lawsuit that is in appeal to kind of just get cleaned up and be done with.
Yeah.
And I would imagine that the lawsuits aren't cleaned up formally until Paul Ikens is actually voted through the Senate. So, but we I don't know when that's going to happen. By the way, have you heard when the
I
SEC
haven't. No, I haven't. I know that they just got through several prominent cabinet positions over the last week, right? With I think with just the importance. I want to take away from the importance of the SEC, but just with the, you got to get the Secretary of Defense, you got to get the person running the CIA, you got to get the person running the government health and human services. So I would see we'll start to accelerate some of these appointments over the next couple of weeks.
Absolutely. So our next topic, pump and dumps. This kind of goes back to what you were alluding to with just some of the craziness that's happened. So the first one that comes to mind is the Trump and Melania meme coins the weekend before the inauguration. As someone in crypto, I appreciated the publicity a little bit. It's a double-edged sword, but it was not a good look, in my opinion.
Yeah, right. It foreshadowed where we're at now. Look, a
Correct.
month and a half later.
Yeah.
Right.
And then you had this last weekend, you had the token, I'm trying to remember.
Libra.
Libra, yes.
Yeah. The Argentinian president.
The Argentinian
president. Yeah.
And then you have Dave Portnoy wrapped up in this one again. We talked about him last week.
Yeah.
It's just like this seems like a bad commercial break in the middle of the crypto bull market that we just need to be over with. We need to.
Well, we should bring everybody up to speed because again, we often don't know who's tuning in for what part of the show, but effectively what's going on is you have this meme coin frenzy going on where literally you and I can spin up a meme coin and call it Teton. We can go and hire effectively a team. We can put it out in the market and we can, if we have the right promotional strategy, we can effectively see the market cap of our Teton token. Right. Again, not real, just theoretically. We could see it go to the moon.
Right. Thousands or tens of thousands of a percent. Yes.
Right. We on the back end, and this is what's happening, have an ulterior motive, right? Which is what we would call sniping, where people are going in and they're making a quick profit. In the case of one of the, I don't know if it was the Melania coin or the Trump coin, there was $100 million made really on the backs of, I don't know if you'd call them volatility traders, retail investors, whoever bought that token in day 2, day 3, and realized like the market cap went from 3 or 4 billion effectively down 95% in a matter of hours. Right.
Yeah. The part of what I was reading, and it seems that this is true.
Really, really bad look.
Yeah, is the same group that helped launch the Melania token, not the Trump token, but the Melania one, also is tied to this Libra token. So they're good at what they do. Whether it's legal or a good look is debatable, but it's just tough. I mean, this is the kind of stuff that gets us bad regulations. Like and all the anti-crypto people, they use this to point to for all their ammunition, but it's just unfortunate.
I'm looking here at my Twitter feed and it's just we're like in the eye of the storm with what's going to go down in Argentina, and I don't know if that's going to lead to more of a slap on the wrist. There's definitely folks that are licking their financial wounds as a result, and of course I don't know all the folks that are behind the scenes, but they know who there are. They know they're out there. And I mean, this is how we got the SEC, right? Like if you go back to how the SEC got started, it was because of what happened with the great, financial crisis of the 20s, 1929, I think. And what we saw was just all this just outright fraud and all this outright, what we would now call just crime, financial crime, led to the SEC being created, and so we're on a slippery slope. We're on a slippery slope.
It's I look forward to the day where we don't have to talk about this, and this is not a news item, but it is part of what this cycle is doing now. So anyway,
so buyer beware.
Yep, absolutely. Or speculator.
Speculator beware. There you go.
Gamblers beware. Yeah. Next topic is Trump posted last night. So we're recording it on the 19th on Truth Social on his account that he basically reposted a couple links. They were all about Ripple and XRP. So that caught a lot of people's attention, good or bad, depending on what side of the fence you're on there. But basically one of them was saying Donald Trump effect bumps Ripple Labs US deals and XRP gains. A bit self-serving for Trump here, admittedly. Like he's trying to say, look what I did. In some sense, this is certainly viewed as a positive if you're from the XRP community. There's, again, the speculation.
What was the meat of his post about?
It was just reposting this link. It was just kind of like, hey, look at this. And, he actually posted 2 different links. Basically, they were both saying effectively the same thing. And, it's, again, if you're in the XRP community, this is viewed as a good thing because Brad Garlinghouse, if the crypto council still stays in place, he was likely to get rumored to be on that. My guess is he still has influence, even if it shifts to something else. That is my read on the situation. But there's other communities, specifically the Bitcoin community, that probably were frothing at the mouth when they saw this. This is the type of thing that they just can't stand, and it's just again, it's the infighting in crypto, and this is kind of fueled in a different way. And you couple this with Don Jr. Actually starting to follow the Ripple Twitter account the other day. So it's like there's like these, maybe not bright lines between these things, but there's starting to be some dots you can connect. So who knows?
Yeah. We can't be naive, right? I thought a tweet that came out this week, and what resonated with me is this crypto executive basically said, effectively, if you want to be in the crypto game as a bigger company, right, as a player, you've got to have an ear in, you got to have a voice in Washington, you've got to have a seat at the table, you've got to be on the inside. And the counter to that is the whole reason crypto and DeFi came about was to get away from the centralization of power, control, influence, etc. So it's like when you put those two ideas, one after the other, we just find ourselves at this really interesting time. Now, we do have a very pro crypto president, but what seems to be very clear, if you just follow just history and the patterns, is like what's popular in November may not be the approach come mid-February. So like the idea of a crypto czar and a crypto mandate and David Sachs, like now we find ourselves, is he in, is he out, is he hot, is he not? It's a lot to follow. It's a lot to keep your head around.
Yep, absolutely.
But I put these next two in here, because Coinbase quarterly results and Robinhood, we're seeing a lot of the 10Ks are coming out, so we're seeing Q4 numbers, and we're seeing year-end results coming out over the last week or so, now that we're in earnings season. And one of the things that came out with Coinbase, and this goes back to regulation and SAB 121, is at Coinbase, and there's an explanation behind it, but they reported a change in assets from like over 300 billion to like 20 some billion. And on the surface, you read the headline, you'd say, oh wow, what's going on? The company's going away. But reality is, it comes back to the central question of custody. And these are customer assets. And so when you think about Coinbase as the custodian for assets that you and I and other investors opening up a Coinbase account, like the whole central idea of whose tokens are those is an important, it's a technical issue, but it's an important issue because in the event of a bankruptcy,
an illegal issue,
a legal issue, the courts recently, in the case of several of these bigger, call it custodians, FTX and others over the last 5 years in crypto, the courts ruled against, the individuals to say, actually, it's the estate of the failed company that actually now owns the crypto. And we'll go through a liquidation process to distribute those assets. And so all that to say, that doesn't mean Coinbase is not going to be here. It doesn't mean that they're in financial trouble. It just means that we've got a lot to sort out still.
Because again, regulations. It's funny
regulations,
but like at the end of the world, in the traditional finance world, you don't have a custody provider or a like someone like a BNY Mellon,
right? A Northern Trust,
You're not also the brokerage. Like they are separate entities. In crypto, those can be functionally commingled right now. I'm a big believer in that they should not be commingled, and we need to kind of get the regulations or laws in place to basically make them do that. It seems like Coinbase is trying to not only I guess walk the walk for the talk that they've been saying. They've been saying that they're customer assets for a while. By kind of treating them that way on their books probably is a great signal. But it is
it's an accounting it's an accounting clarification. And I think when you go in and read the comments from the CFO, effectively what they're saying at Coinbase is, yes, we may be opening ourselves up to a new era of competition with banks and brokerages getting into custody of crypto assets. But there's a pretty high bar now because you're going to be a regulated institution. And just like policies can change for the benefit of a company that wants to get pro crypto, get really big in crypto, they can also change in 4 years or in 8 years. So companies have to make these strategic decisions. But I think at the end of the day, again, more institutions getting involved in the space, to me, is a net good thing in the sense of the safety of customer assets. Say what you will about it centralizing and the big get bigger. At least the safety of your and I's dollars when we invest in crypto, that should be sort of sacrosanct, like it is with the stock market.
Absolutely.
Yeah. And then Robinhood, just moving on to the Robinhood quarterly results. I thought this was interesting because, again, we've seen this with the market, but largely a retail trading platform or investing platform, but they're starting to do a lot more in crypto, and their revenues coming out at 12/31 last year indicate that, they're active in Bitcoin and Ethereum and Solana, but they're also starting to get more active in some of the meme coins, right or wrong. And a lot of retail speculation happening. So,
yeah, when you posted this one about Robinhood, the huge revenue jump, right, 490% quarter over quarter is pretty crazy. Obviously, that coincides with the election and crypto taking off in early November. The first thing that jumped to mind there for me was, I wonder if this includes their purchase of Bitstamp, the crypto exchange. Is that revenue starting to show up in there? And I looked it up, and that transaction hasn't closed yet. So I'm guessing that is not in their results yet. So it could even more magnify that, 40% of their business is crypto related will jump at some level once the Bitstamp transaction closes in the first half of this year. So.
And just to give listeners like a perspective, Coinbase is about 6x the size of Robinhood when it comes to trading volumes of crypto. So they're but they're a real player. I mean, I think it indicates that people are looking at them as a place to do crypto transactions, and more retail investors getting involved in the space or choosing to transact through them.
Yeah, Coinbase also has probably multiple orders of magnitude more tokens that are tradable than Robinhood. My guess is Robinhood's less than 2 dozen. Would be my guess. Coinbase is probably 200. So that wraps that one. So the next topic is, we talked about it last week, how the SEC, or maybe 2 weeks ago, the SEC had rescinded SAB 121, but it's coming back up just because people are starting to put more thought around it. And you had brought this one forward, just how it's going to make competition with the traditional banks or custodians to be custodians of crypto. And the part of the headline that I went back and found that was in my feed was State Street and Citibank are looking to launch custody services. So here they come.
Yeah. I mean, I think the question becomes, like, when you think about net capital rules, there's so much that was being put in place at these big too big to fail institutions around what's called Basel III and Basel Endgame. It sounded like movies, but a lot of that is now up in the air because of the new Trump administration and some of the relaxing, or at least the language around relaxing regulation at these highly regulated financial institutions, or at least they feel they're highly regulated. And so the question is, will we see more institutions feeling like they can go on their front foot to start to do, crypto for their institutional customers? And we're going to get to one of those institutional customers in the next headline, but it speaks to just, I guess, the business confidence from the banking and financial community around what they're perceiving as signal that, okay, crypto, we're open for business. One and the same.
And, prior to the election, they may have been thinking about this, but there's no way they were going to publicly say it. I mean, just the idea that they can publicly say something is a huge change in just the sentiment generally.
Well, yeah. Imagine if you're a C-level executive and you're bonused on, P&L, and you're in charge of custody and trust services at a giant financial institution. I mean, what are you trying to do? Where's the growth happening? It's happening in alternatives, and it's happening in crypto, right? So those are the areas where you're going to try to go grow your business, right?
Absolutely. Our next topic is, I don't even know how to say this correctly.
CalSTRS, the
CalSTRS.
California State Teachers Retirement System. So
Okay.
it's the cousin to what most people know as CalPERS, which is the California Public Employee Retirement System, which is the largest public pension plan in the country. But these are gigantic pension funds in California, given the size of their economy. And they came out and their recent, I think, 13F filing that they own 83 million in now Strategy, or formerly MicroStrategy. They're the second largest pension, and they own over 5,000 shares of the company. So this is a big institutional investor that people follow, and they obviously see something in Strategy in their business plan. It's not a huge amount of money in the scale of how big they are,
right?
But nevertheless, I thought it was an important headline.
Yeah, makes total sense. Our last topic here is Binance.us resumes USD trading. So why are we talking about this? I guess is a question that someone may ask. So Binance.us is the US version of Binance.com, and they've been around since, I want to say 2018, 19, something like that. They initially had the ability where you could send money from your bank account into your account on Binance.us to buy crypto, as part of the turning of the screws that from the old SEC and from the Fed and part of Choke Point 2.0 and the crackdown generally that happened on Binance globally in late 22 and 23. They were forced, they couldn't find a US bank, shocker, and they had to stop USD trading. So if you wanted to do anything, you had to have a stable coin that you got somewhere else so you could come there and trade. So obviously that was not good for the business. It was way down. But as of today, they announced that you can now send ACHs in from your bank and do USD trading. So again, the tide has shifted.
Yeah, it is. Well, it's not all doom and gloom in crypto and digital asset land. I mean, like, there's so many different vectors through which you can look at this whole space. I mean, yes, I think if you looked at, the price of Bitcoin and some of the bigger crypto assets by market cap, the prices are down a little bit. However, there is a lot of stuff happening in the background. And I think you said earlier in the show that it's your personal view. Again, we're not offering advice, that we're not quite at the end of this this current cycle. Is that your take?
That is my take. I think we're I've been using the analogy lately. We're on a commercial break, and we will be back for the bit of the finale of sorts. So
okay, all right,
yep, awesome. Well, thanks for joining us on this episode of the Weekly Crypto Check-In. To stay updated on future episodes, you can find us in any podcast player by searching Teton Crypto Capital or the Weekly Crypto Check-In. Take care.
The information presented in this podcast is for educational, informational, and entertainment purposes only and does not constitute financial, investment, trading, or any other advice. The content provided is general in nature and not tailored to any individual's specific circumstances. Always conduct your own due diligence and consult with a professional financial advisor before making any investment decisions. Cryptocurrency trading involves significant risks, including, but not limited to, the potential for loss of all or a portion of your investment, market volatility, and regulatory uncertainty. The hosts, guests, and producers of this podcast are not responsible for any decisions or actions taken based on the information discussed herein. Cryptocurrency is not legal tender in many jurisdictions and is subject to market risks. Past performance does not guarantee future results. This podcast does not endorse or guarantee any investment outcomes or results. Use of this podcast implies your acceptance of this disclaimer.